What happens if investors, savers, markets around the world lose confidence in the US dollar? In which case, you may have to go back to some kind of gold standard. We have to get back to some kind of gold system to restore confidence. What would the price of gold have to be to make that system work? If you take M1 and take 40% of that and say, okay, that's how much gold I need to back it up. Okay, how much gold do I have? The answer is 8,133 tons. That's how much gold the US has. And just do the math. And this is, as I say, this is seventh grade math. Is it what would the price per ounce have to be for 8,000 tons to back up M1? And the answer is $27,000.
Earlier this month, renowned economist and investment banker Jim Rickards dropped a bombshell price prediction for gold, estimating the precious metals price will hit a staggering price of $27,000 in a few years. In an opinion piece published in the Daily Reckoning on May 13th, Rickards wrote, "I've previously said that gold could reach $15,000 by 2026. Today, I'm updating that forecast. My latest forecast is that gold may actually exceed 27,000. I don't say that to get attention or to shock people. It's not a guess, it's the result of rigorous analysis." Rickards' $27,000 prediction is predicated on the world returning to the gold standard when the public finally loses confidence in top currencies like the US dollar. According to the investment banker, most central banks like fiat currencies now, but they may have no choice but to return to the gold standard. If confidence in command currencies collapses due to some combination of excessive money creation, competition from Bitcoin, extreme levels of dollar debt, a new financial crisis, war, or natural disaster. To explain how he arrived at the $27,000 prediction, Rickards pointed out that the US M1 money supply is $17.9 trillion, assuming a 40% gold backing. A standard ratio used from 1913 to 1946, $7.2 trillion worth of gold would be required to back the system, yielding a gold price of $27,533 per ounce. In a recent interview with ITM Trading's Daniela Cambone, Rickards shares more information about his $27,000 prediction for gold and the events that will precipitate this bombshell prediction. We will present clips from the interviews. As we do, please ensure you watch the video to the end, subscribe to the channel, and drop your comments and observations in the comments section below. These simple actions help with the YouTube algorithm, so our videos can reach more people. Thanks for the support, and enjoy the video.
What happens if investors, savers, markets around the world lose confidence in the US dollar? And by the way, if people lose confidence in the US dollar, don't think for a minute that they're going to run to the euro, the yen, pound sterling, Canadian dollars, or whatever. They're not. All those currencies are part of a global euro dollar, US dollar system. So if you lose confidence in US government securities, for example, the US dollar, you're not going to run to, German bonds or Japanese government bonds. That whole system is going to be severely impaired. In which case, you may have to go back to some kind of gold standard, gold linked, gold backed in some fashion, not because you want to. There's no central bank in the world that wants to go to gold, but they may have to restore confidence. Now, if you do, if you say, okay, we have to get back to some kind of gold system to restore confidence, what would the price of gold have to be to make that system work? Well, we have a lot of historical precedent. There was a real gold standard solid gold standard from 1870 to 1914, modified gold standard from after World War I, say 1919 through World War II, the Bretton Woods standard from 1944 to 1971. So we do have precedent for this. In every case, you don't have to have enough gold to back 100% of the money supply. Some of the hard shell gold bugs say you do, but that's not true. Historically, you need between 20 and 40%. So let's just take 40%. Look at the U.S. money supply, and I use M1 because it's broader than Fed-based money. It includes checking accounts. It's kind of like the money from the banks that drives the real economy. So if you take M1 and take 40% of that and say, okay, that's how much gold I need to back it up, and then say, okay, how much gold do I have? The answer is 8,133 tons. That's how much gold the U.S. has. And just do the math. And this is, as I say, this is seventh grade math. What would the price per ounce have to be for 8,000 tons to back up M1? And the answer is $27,000. By the way, I did the same math not that long ago. Well, I don't know, 7, 8 years ago. And the answer was closer to $15,000. But the reason it's higher, gold is still gold, but the money supply is a lot bigger. So with the same amount of gold and a larger money supply, you need a higher price per ounce to back up the money supply. And by the way, I spoke to Paul Volcker about this, and he agreed. He said he wasn't advocating for a gold standard, but he said if you had to go back to a gold standard, he just threw his hand in the air and said, "Oh, the price of gold would be unbelievable." And of course, he's right. So that number, if things kind of remain the way they are and confidence in the dollar remains, we can talk about that, by the way, because there are arrows directed right at the heart of confidence in the dollar having to do with Russian assets in the war in Ukraine. But if confidence is maintained, then it's a market factor. Maybe you don't get there. But if you have to go back to a gold standard, yeah, $27,000 would have to be the price in order to avoid massive deflation.
During the interview, Rickards observes that the imminent collapse of the Western-backed financial system might seem far-fetched now, but there are ongoing plans, mostly being carried out by the backers themselves, that could pull down the entire system almost overnight. A clear example Rickards gives is the efforts to use frozen Russian assets to fund Ukraine's war. According to reports, money generated by Russian financial assets frozen in Europe will soon start flowing to Ukraine to give the Ukrainian government a boost as it struggles against Vladimir Putin's troops. G7 finance officials met in Italy last week to discuss how proceeds from Russia's frozen $282 billion can be funneled into Ukraine. While speaking to counterparts from other countries a few days later, U.S. Treasury Secretary Janet Yellen said, "It is vital and urgent that we collectively find a way forward to unlock the value of Russian sovereign assets, immobilized in our jurisdictions for the benefit of Ukraine." Rickard warns that Yellen and others advocating for Russian assets to be used to fund war efforts against Moscow are severely underestimating Putin and how volatile his reactions will be to such developments. In his words, doing this could throw a monkey wrench into the entire global clearance and settlement system.
More likely all the time because of the stupidity or blindness of the Biden administration officials. And here, let's talk about the effort to steal Russian assets. Now, at the outbreak of the Russian special military operation in Ukraine, at the start of that, the U.S. froze the assets of the Central Bank of Russia. Yes. Almost unprecedented, not completely, but almost. About $300 billion of U.S. Treasury securities owned by Russia. That they had surpluses, they had dollars, they invested the dollars in U.S. Treasuries. They had about $300 billion. They're all digital book entry. There are no physical Treasury securities you can put in a vault. Haven't been since 1979. So this is a digital ledger maintained by the Fed and the Federal Reserve and the U.S. Treasury. And Russia had about $300 billion of Treasury securities. So we froze them. Freezing them just means, okay, they're still Russia's securities, but they can't use them. They can't collect the interest. They can't pledge them. They can't repo them. They can't sell them, et cetera. They're kind of frozen, but they still belong to Russia. Now the U.S. wants to go a step further and seize them, actually convert the title, turn it over to some trust fund for the benefit of Ukraine. And actually, they say seize, I say steal. It doesn't mean that the next day the U.S. Treasury market collapses. There are, forecasts like that. Some people get a little hyperbolic. It doesn't mean that. I mean, the Treasury, one phone call to Jamie Dimon at JP Morgan and tell them to buy U.S. Treasury notes, and they will. The banks will do what they're told. So, but here's where the system could collapse. First of all, Putin would retaliate. There are well over $300 billion of Western assets in Russia. BP, Chevron, Shell, major U.S. oil companies, Starbucks, Coca-Cola, McDonald's, you name it. And they haven't, a lot of those businesses have kind of pretended to get out of Russia, but the assets are still there. Franchises are still there. Russia has not expropriated them, but they could. They could take all those, and they will. Putin said he will. The thing about Putin is he doesn't bluff. He thinks very carefully about what he says. And when he says something, he'll do it, and he has. So if the U.S. steals the Russian treasuries, Putin will expropriate Western oil and energy and natural gas assets and just give it to Rosneft or Gazprom, which are the major Russian energy companies. It's estimated that there are more Western assets in Russia than there are Russian treasury bonds in the West. So Putin could actually make a profit on this whole thing. But here's the other play that it's clear to me because I'm a lawyer, but no one else has even discussed. Where are these assets? There's only about 5 billion of the 300 in U.S. banks, and those can be stolen very easily. But over 200 billion are in Euroclear. Euroclear is the largest clearing, settlement, and custody organization in Europe. And it has over $40 trillion of total assets, stocks, bonds, other types of securities, et cetera. But it has these 200 billion of the 300 billion Russian assets, U.S. Treasury securities, are in Euroclear. Now, if you seize those, Euroclear has offices around the world. They have offices in Bahrain, UAE, Hong Kong, Singapore, a rep office in Beijing, et cetera. Russia could sue Euroclear in any one of those offices. And just take Hong Kong, for example. Hong Kong is an interesting case. It's under the thumb of the Communist Chinese, but it kind of walks and talks like a Western legal system. And they have lawyers and courts and all that. So Russian lawyers show up in Hong Kong, sue Euroclear for 300 billion or more, with damages, et cetera, and get a judgment in favor of Russia. Russia can now run around the world and seize Euroclear assets that belong to anybody to recover that judgment. You could throw a monkey wrench into the entire global clearance and settlement system.
Since Russia's foreign currency reserves were frozen in 2022, economists and analysts have been warning about the lack of prudence in weaponizing the Western financial system against other countries, especially when countries like the US have done much worse without even a slap on the wrist. Now, Rickards warns that the continued weaponization of the system will result in dire consequences that could devastate the entire global financial system. If that happens, there will be complete chaos, and gold prices will soar. But the price to be paid for that will certainly be too high. Do you agree with Jim Rickards' analysis and $27,000 gold price prediction? Please drop your comments and observations below. Smash the like button and subscribe to the channel for more videos on precious metals and the overall US and global economies. Thanks for watching.